I'm Matt Bechard with REIT.com here in Boca Raton, Florida for REITWise 2014. Joining me today is Brad Molotsky, Executive Vice President and General Counsel with Brandywine Realty Trust. Thanks so much for joining us today.
Pleasure.
I'd like to start by talking about sustainability, one of your areas of expertise. We hear a lot about the ability to reduce costs, but what role can sustainability play in efforts to maximize revenue?
So it's actually an interesting question because a little bit of it is, do you view cost avoidance as maximizing revenue? So there's an interesting dynamic there. It's also a little bit about who pays for that which we're talking about. So if we're talking about things like water, waste, energy, in our food group, which is office predominantly, the tenant pays. And so our ability to allow for the tenant to pay less, does that derive additional revenue to the company, to our shareholders? Some instances, yes, but for the most part, no. It's just an ability to have existing tenants who are in our buildings pay less. And so when you're talking about kind of water, can you use less water and still flush the toilets and or get the grass to look green? And so a little bit of that's measurement. Can you put aerators on faucets? So for instance, in our portfolio, we spent like $27,500 in putting aerators on all the faucets. Through that spend, we were able to save 22 million gallons of water. So it's pretty good stuff. That 22 million gallons of water equates to about $225,000 of avoided cost. So we spent 27, we saved 225. Does $225,000 mean a lot to the portfolio? No. The portfolio is 30 million square feet, so $225,000 isn't statistically relevant, but it's a gift that keeps giving in the sense that it's every year. And that inures to the tenant's benefit.
And do you think companies like Brandywine that are leaders in sustainability, energy efficiency in the REIT space are helping to attract new investors who may not have been looking at companies like Brandywine?
So that's a great question. I think the answer is it's not line of sight directly because we're doing this or others are doing that they're attracting per se, but it's moving in that direction. What do I mean? So there are a variety of different reporting mechanisms that report on sustainability. GRI, the Global Reporting Initiative, CDP, Carbon Disclosure Project, GRESB, the Global Real Estate Sustainability Benchmarking. Each of those three things measures to some degree sustainability. They also measure corporate social responsibility, so CSR, different acronym, to some degree. And so they score people. If you look at 2009, 2008 to 2013, the level of Fortune 100, Fortune 500 companies that participate in GRI went from, say, 68 companies to 126. So not a huge amount of companies, but statistically very relevant in movement. On the CDP side of the ledger, 56% of the Fortune 500 were reporting on CDP in 08. It's now over 70% are reporting on CDP. GRESB, a relatively newcomer to the marketplace, based over in Europe, they're attracting institutional capital to them. And so that company, that group of companies didn't exist 5 years ago. Well, they've now gone from 200 companies to over 543 companies that are buying their service as an institutional investor and interested in the data that says whether somebody is more sustainable or less sustainable, more corporately, socially responsible than less. And so the numbers are slightly staggering. I mean, you're talking about GRESB was 0 5 years ago. There's $6.1 trillion worth of capital flowing through their system now. Same thing on CDP. They were kind of not relevant in 02, 03. There's $87 trillion worth of capital that are paying attention to that which they're talking about. And so is it direct line of sight to a Brandywine, to a Vornado, to a Kilroy who are playing in this space? Not necessarily direct, but as time goes on, institutional owners like a CalSTRS, an Oasters, a Teachers, who do invest in our collective companies, are starting to ask those questions. What are you doing? How are you reporting? What are your numbers looking like? I think two other things that are going to be relevant to that conversation are the SASB, which is a group 501c3 that is formed as of a couple of years ago. Sustainable Accounting Standards Board. So they are a collection of interesting companies, relevant companies. Harvard University, part of it. And so what are they doing? They're looking at a variety of different industries and saying, hey, we have all these sustainability metrics out there. We'd like to standardize this so that everybody that's looking at it can get something that's relevant to them that's not being reported differently. Real estate is on their event horizon for 2015. And so if one is to believe that they're a relevant organization, 2015 will become a relevant time frame for getting their standard out, and then who adopts it, question, but a possibility. Similar thing earlier this week, the international exchanges, so the Tokyo Exchange, the New York Stock Exchange, NASDAQ, the London Exchange, all kind of banding together to talk about, should we as international exchanges have a standard for purposes of listing requirements on sustainability? So if companies are listing with us, should we be mandating some level of uniform reporting? Again, far from cup to lip to something that's mandatory at the moment, but those indexes are very relevant internationally. If they start to push that and they actually execute on it, a variety of people that heretofore haven't been reporting will then have to start to report.
Brad, thank you so much for joining us.
Pleasure.
For more on this and other REIT news and analysis, be sure to visit REIT.com.